Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, and you're in the right place if you want zero emotional BS and just the data, just the real raw data that you need to go out there and make better real estate and mortgage decisions for you and your family. We do this every Thursday right here at 11 a.m. on WPSL, just before Clay and Buck. Greg lets us warm the crowd up for the big boys. We are affectionately calling ourselves the Clay and Buck warm-up show. But yeah, super excited to be with you another week. It's been another interesting and slightly crazy week in the world of real estate and mortgage headlines. My God, the headline writers for financial articles remind me of the old romance novelists with those crazy book covers and what was the name of that one guy? Fabio was the big shirtless blonde heartthrob that was on the cover of all those romance novels in the 80s. Wow, gosh, I'm getting old if those are my references. But the headline writers of today are no different. They're just stretching the bounds of believability, and we're going to dive into them. I'm looking at one here right now that's just it's actually quite maddening. And I say it all the time. The headlines are no longer delivering the news. It's just this big emotional spin, and everybody's fighting for your 15 seconds of attention, and these headlines are just clickbait. And we're going to dive into a bunch of data this week, but I don't know. I find it fascinating because if you think emotion doesn't win over logic, just look at the stock market. I mean, it can be down 200 points on a Tuesday and then close up 400 points on Wednesday. And that's, what happened this week. And it's interesting to me because there's no difference in value of that company, whatever that company is, from the close of business on Tuesday to the open of trading on Wednesday morning. The only difference is the news cycle that we're in and whatever spin doctoring has bubbled its way to the top. And it's fascinating to me. But anyway, we cover all of that each week. We dive past the headlines. We take the emotion out of it. And we just give you the inside scoop, the tips, the tricks, the strategies that you need to make better real estate and mortgage decisions for you and your family. Because, man, I'm in the business and have been for a very long time. And these headlines have me scratching my head sometimes. And, for me, I poke fun at them. So I appreciate the content, if you will. It's like, the old Johnny Carson days. The comedians and the talk show hosts love the politicians because they give them plenty of fuel. Well, it's no different for me when I'm reading these financial headlines. And we're going to dive into one here in just a second. But before we do that, a big part of the show is your questions and your comments. And we encourage you to call or text those questions to us to 855-462-7292. That is the Anytime hotline, 855-462-7292. And you can get your questions on the air. Jennifer, my lovely producer, is womanning the hotline, and she'll get your questions on the air. So, hey, Jen, good morning. How are you?
Good morning, Mark.
Yeah, so she's standing by. She'll get your questions on the air. 855-462-7292 is the toll-free Anytime hotline, and we will get you up and running, or Jennifer will. She'll get your questions on the air. Yeah, we always enjoy your participation, if you will, and she'll filter out the crazy comments for me. She always does. But hey, let's dive right into this headline because this is from Little Miss Poo-Poo Real Estate, Diana Olick from CNBC. I've had a lot of fun with her articles of late, and I don't understand the point of the negativity because here we go again. This one was from yesterday afternoon, and it says homeowners lose wealth as rising interest rates weigh on home values. Let's let that sink in just for 1 second. Homeowners lose wealth as rising interest rates weigh on home values. Okay, lose wealth. That indicates that the market's going down, right? And we've all seen the headlines. We've seen the headlines that show housing inventory surging, housing activity slowing. We're in a housing recession. We talked about it last week. But if you read the key points of the article, it goes on to say some homeowners are losing wealth as high mortgage rates weigh on home values, at least on paper, as the once red-hot housing market cools. Okay, I'm just scratching my head here, and by default, I know where this article's going, so I'm not going to give it away yet. But it talks about sales have been slowing down for several months, with mortgage rates now double what they were at the start of the year, right? We all know that. That's no new news. Interest rates have been rising consistently, and we've talked about it for well over a year. You know, this was no surprise. We saw it coming, even when the Fed was lying to us. I used to say I wasn't sure if they were lying or just were unaware of the inflation, the teeth of the inflation cycle that we were moving into. And at the time that I was sharing that insight, I was kind of giving them the benefit of the doubt. But either way, it's unacceptable for somebody at that level not to see the inflation pressure for what it was and, you know, calling it transitory. But anyway, let me go on with this. Data suggests the so-called tappable home equity may have peaked in May. It says that the home prices, right? Home prices dropped 0.77% from June to July. So wait a minute, 0.75%, less than 1% of a home price decline from June to July. And suddenly we're talking about people losing equity. They're losing equity wealth. And I'm scrolling back to the headline, homeowners lose wealth is what this article is saying. Well, you keep reading in the article, and I'm going to sum it up here because this is driving me nuts as I read it. It says annual home price appreciation still came in at over 14%. Well, wait a minute, Miss Olick. If homeowners are losing wealth, how is that happening if home values are 14% higher this year than last? I find the whole thing flabbergasting to me that they would write an article that says we are losing equity wealth is essentially what the headline's saying. Yet then deeper in the article, they go on to say we had a 14% year over year appreciation cycle. And there are markets in Florida that saw well over a 14% appreciation cycle. So yes, the activity has slowed a bit. You know, we're seeing a fewer number of homes closed this year, same month as last year, but we're not seeing the values go down. Maybe the asking price of listed properties dropped, you know, a little less than 1% from June to July, but that has nothing to do with annualized appreciation, which is where the wealth is created. And the people who sold their house in June, assuming that they didn't buy it earlier that month, that they've owned it for at least a few months, are making money, at least on paper. So I share all that only because this is a common theme in the day and age that we live in. Everything is over dramatized to get your attention. And housing is no different. I mean, if you go on YouTube and type in housing crash, my God, every armchair economist with a webcam has a news report about real estate and why the market is toppling. And guys, we talk about it all the time, and we're going to dive into it in depth in this show. Supply and demand is what drives any value, not the cost of money. Supply and demand. And there's another article floating around out there that we're going to dive into that talks about the number of newly listed properties, active listings. That number is surging, and it is, but we're going to talk about what it's surging compared to and where it stands historically. So sit tight. We're going to get to a lot of good stuff this week. We're going to get to your questions at 855-462 7292. That's 855-462-7292. That is the Anytime hotline. Give Jen a call. She'll get your questions on the air. We're looking forward to the class participation. We may even let the lunatics run the asylum. We're feeling slightly, what's the word? We're feeling slightly adventurous. We're going to let the lunatics run the asylum. But anyway, I am the head lunatic, and I'm running the asylum. So, yeah, we're going to keep this rolling. But, you hear the music? You know what that is. That is my cue. We'll be back in 2. Sit tight for 2 short minutes, and we'll be right back to dive deep into the data and take your questions right here on the Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you heard the man. If you want your questions on the air, just give us a call or shoot a text to 855-462-7292. That's 855-462-7292. The lovely Jennifer is womanning the hotline, and she'll get your questions on the air. If you prefer to shoot us an email, you can do that by visiting mr.mortgage. That's mr.mortgagenever.com. Just type in www. Actually, you don't even have to type in the W's. Go up to the address bar, type in Mr., and then hit the little dot, type in mortgage, and hit enter, and boom, the website pops up. I thought that was so cool when we got the Mr. Mortgage domain several years ago, and we no longer needed the .com, but my goodness, it takes a while to get used to that. So mr.mortgageno.com, in the upper right-hand corner of the website is a Contact Us button where you can submit your questions. But hey, you heard me referencing another article as we were rolling into that break where I was talking about housing inventory surging. And there was a lot of news around that, so, you know, in the last month or so. They're speaking to that to define housing as in a recession because the number of closed sales is down, yet inventory is moving up. But here's the thing, guys, and this is published to the Facebook page. So if you go to Facebook and search the Mr. Mortgage Show, our radio show webpage or the Facebook page will pop up. And each week after the show, I always put a lot of the data that we use on the air on the Facebook page. So go to Facebook and search The Mr. Mortgage Show, and you'll find a ton of data. But there's an article there that I shared earlier this week that shows the actual housing numbers as reported by the Federal Reserve. And you can see clearly that the inventory is on the upswing. But if you look at the chart, you can see that we're still half of where we were in 2019. So again, everything requires perspective. Everything is relative. Foreclosures surge compared to what? Compared to the moratorium when nobody could foreclose? Housing inventory surges compared to what? Last month? Last year? Because if you compare it to 2019, we still are dramatically down from a housing inventory standpoint. Guys, it's clear that the higher interest rates have slowed the demand, and it took something to knock some sense into some people because everybody was, willing to pay, $40,000 or $50,000, $100,000 over the asking price, waive appraisal, waive this, waive that. my God, what were they drinking? What were they smoking? But they were lining up to do it. And now that interest rates are, where they are, depends on what program you're qualifying for, but they could be in the 5s, they could be in the 6s. But the reality is that's still affordable money historically. I know it sounds expensive compared to, 2 and 3%, but we're not getting back there anytime soon. I don't care what economist says we are. The most recent data that I saw suggests that the end of 2023, we're going to be back in the 4s. And I don't see a path to that, 2 or 3%. I can buy into a 4 or 5% norm, but the reality is that 4 or 5 or 6% money is pretty darn affordable compared to inflation, 8 and 9%. Money's cheaper than inflation. It's essentially free in some instances when you compare it to other investment vehicles as a lender, tying money up for 30 years at 5.5 or 6.5%, whatever the rate is. So I share all that only to encourage you to keep perspective, because yes, inventory is up, but it's not up to where it has been historically. And if you look at 2019 leading into the pandemic, you can essentially take an eraser and take 2020 and 2021 off the board, because those are statistics that were manipulated by the response to the COVID crisis by the Federal Reserve and in economic policy worldwide. We all played into it, and it was necessary. But when we're comparing now a more normal environment, if you will, we need to compare it to the most recent normal environment, and you can't compare where we were 18 months ago. That's not a normal environment. So I share all that only to encourage you to keep a little bit of perspective on things. Check out the Facebook page, The Mr. Mortgage Show on Facebook. There's a ton of data there. But anyway, as always, questions are my favorite part of the show, and I've been promising to get to them. So let me throw it over to Jen and see what she has teed up question-wise, and see if we can't get to that part of the show. Hey, Jen, what do we have over there?
Bonnie is asking, are there special loans for manufactured homes? I've heard they are hard to finance.
Hey, Bonnie, that is a good question. I kind of like how that has a bit of a rhyme to it. Special loans for manufactured homes. Tune in at 5 for details. The reality is almost all manufactured housing newer than 1977, and I know there's somebody yelling at the radio right now saying, you don't know what you're talking about, it's June of 1976. Well, technically it's July of 1976, but very few people know what month their manufactured home was completed in. So I say 1977 to be safe, because only half the year of 1976 is financeable at all with any loan program. So 1977 or newer, double wide or single wide, assuming that you buy the dirt, right? The lot is part of the transaction. You're not renting the lot, because that's a whole different animal. But you own the dirt is the terms that we use. Do you own the dirt? If that's the case, and you're buying the lot and the home, it's newer than 1977, then FHA, VA, and conventional financing are available. And if you're in one of the Western communities in a rural designation, USDA financing is available also. And I share that only because there are a lot of misconceptions around manufactured housing. I think for the simple fact that if you're in a park, if you will, where you rent the lot but you own the home, those loans are different. And I think because of that, there's a misconception about what loan programs are available. But, single or double wide, newer than 1977, and you own the dirt, then all loan programs are available, assuming that you qualify. But that is a great question, and we get that one often for that very reason, that there is a lot of confusion around the available program. So hopefully that helps. If you need more information, feel free to give us a shout. 855-462-7292 is the Anytime hotline, and it rings in my office when we're not on the air. So when we're not on the air, we forward that to the office line. And I want to say that Bob called in yesterday, and he had heard me talking about insurance policies renewing. I had mentioned that one of the referral sources that we use has been getting very aggressive with the rate quotes. So he called and he wanted that phone number. I gave him the phone number, and lo and behold, it looks like he's going to save some money on homeowners insurance. So call the Anytime hotline. It paid off for Bob, 855-462-7292. I feel like I need to throw in a bamboo walk or what was it? The bamboo steamer or the walk, well, the old infomercial from the 80s. Again, another 80s reference. I am getting old. But anyway, let me throw it over to Jen and see if she has another question. Jen, do we have anything teed up over there?
Amanda sent this one. I've been self-employed since 2017. I don't show a loss on my taxes, but I don't show much income either. Is there a no-income loan? I know there used to be.
Hey, that's a great question. Yes, there used to be. Right now, there's not. And that's not really a bad thing, because some of those no-income loans led to the trouble that we got into a while back. But there are some interesting programs for self-employed individuals where we can use the income as derived by your bank statements. And what I mean by that is we look at the most recent 12 or 24 month worth of business and or personal bank statements. And based on your deposits, we can calculate an income from that. So as long as the money's making it into the bank, I know it's not making it onto your tax return, but if it's making it into the bank, one of those alternative income verification programs that are also known as bank statement loans, that may work for you. There's a couple other more creative programs that require a little more detail than I have time to do on the air. But yeah, a bank statement loan, it works ideally for self-employed borrowers, and I'm happy to walk you through that. If you need more information, reach out either 855-462-7292 or shoot us an email through www.mr.mortgage. But I appreciate that question. That's a really good one. We get it often. There are a lot of self-employed individuals in our area taking advantage of fantastic accountants and CPAs. And just, my office used to be right next door to one of the leading CPAs in Palm Beach Gardens years ago. And we had a lot of good conversations there in the break room, in the common spaces in the office. And I used to laugh because I've never heard anybody walk into his office and say, "Hey, Pete, do me a favor and make me mortgage ready." They all walk in and say, "I want to pay the smallest tax bill possible." So he rolls up his sleeves and starts writing things off and writing things down. And that's great for paying taxes, but it's not great when you need to qualify for a mortgage. So because of that, there's a lot of creative loan programs that have been designed to help self-employed borrowers. But I digress. I hope that information helped. I certainly appreciate the question. But you hear that? You hear the music? That's my cue. We'll be back in two. Sit tight for 2 short minutes. We'll be back on the other side of this break to take more of your questions. Thanks.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, and we do this every Thursday right here on WPSL at 11 a.m. We're super excited to be with you, warming up the crowd for Clay and Buck. The big guys are on deck. They'll be with you here shortly, and I'm sure they've got a great show lined up for you today. So we're super excited to be with you. We're doing our best. We're trotting along here. We're working through some questions. Hey, Jen, do we have any questions over there? How's the hotline looking?
Yes, we have a lot of questions this morning.
All right, we will keep the train rolling. We'll keep your questions coming. Jen says we've got them, so let's get to them. Hey, Jen, what do we have?
Sal sent a text. Can we do a refinance or home equity line for the down payment on an investment property?
Hey, Sal, that is a great question. And yes, sir, you can. So a lot of people have a preconceived notion, a misconception, if you will, that I've met Miss Budweiser and Miss Coors, but I've never met Misconception. But I'm sure she's out there somewhere. Anyway, yes, you can. There's a lot of misconception around borrowed funds for a down payment, because technically you can't borrow money for a down payment. It needs to be your money. However, the equity in your home is your money. So you can pull the equity out either with a refinance or with an equity line and use that money as the down payment on an additional purchase. Now, the caveat is, of course, you need to qualify for all of the debt. So whatever the equity line payment is, or the new mortgage payment, if you pull the cash out, you're going to, all of that needs to be calculated against your income. If you're buying an investment property, then we're also going to factor in the income being produced by the property in the form of rent. And you've heard me talk about the landlord loan, and that requires no personal income underwriting. They're just solely looking at the income produced by the property. So if the property cash flows or pencils, meaning that the rent income covers the debt outflow, and that's principal, interest, taxes, and insurance. If there's any homeowners association, naturally that needs to be included in that payment. But if the rent covers that, even a 1-to-1 ratio, then you're good to go. So that's the landlord loan, but that makes it even easier to qualify. But back to your question, yes, borrowed funds in the form of an equity line or cash out refi, you'll be fine using those funds for a down payment on an investment property. Great question, so appreciate that. Let me throw it over to Jen to see if we have another one ready.
Molly is asking, I live with and take care of my parents. They are both retired and get Social Security and disability. Can the three of us buy a house together, even though they are retired?
Hey, Molly, that is a great question. Short answer is yes, absolutely. The three of you can. Multi-generational households are becoming popular again as a product of house pricing, and we are seeing more and more of it. As far as their source of income being retirement, disability, whether it's a pension or 401k, that's not a problem. We just need to verify that it's going to remain in effect. So we're going to ask for the Social Security awards letter. We're going to ask for documentation verifying the pension, those things, the disability. And one of the cool things is if the income sources are tax-free, then we have the opportunity to gross that income up, because when you're applying for a mortgage, we use your pre-tax income to qualify you. So if you make $100,000 a year, but after tax you're making, I don't know, 75, and if we keep paying for all of the things that we're paying for in this country, maybe it's worth 50. But anyway, my point is that you qualify that $100,000, that gross income is what's used to qualify you for any loan program that you're applying for. If the income source is tax-free, then you're not getting the full borrowing power, if you will, of that money, because it's already a net number. So we gross it up. We take your effective tax bracket and whatever the associated tax burden of that bracket is, let's say 22%. I don't know. I don't know why I picked that number, but let's just say that. Then that income is grossed up by 22%. So we are now using the pre-tax number to give you the full borrowing power. So I hope that makes sense. If you need more information around that, 855-462-7292 is the Anytime hotline. And as I mentioned earlier in the show, that pushes to my office when we're not on the air. So I encourage you to call that number. We'll walk you through any additional information that you need. But I appreciate that. Thank you so much for the call, and I hope that helps. So, hey, Jen, what else do we have over there?
Alan sent a text. I'm relocating to Texas and want to sell my house. I know the market is shifting and prices are down. Is it still a good time to sell, or should I rent a house out until the prices come back up?
Hey, Alan, all my exes live in Texas, and they don't let me in Tennessee. Remember that old country song? Oh, my exes live in Texas. That's why I hang my hat in Tennessee, or something like that. I don't remember. Sorry, Alan. I digress. I have sometimes the focus of a child, and music jumps into my head sometimes. But so that's an interesting question. If I'm understanding it correctly, you're relocating to Texas, and you're wondering if you should hold on to your property and rent it out. If I'm understanding this correctly, because you think that values are down and it would be better to sell later. I don't know that I agree with that. And I jump back to, Little Miss the Sky is Falling, Diana Olick, in that CNBC article that I referenced to open the show. She's talking about, what did it say? I've already scrolled past it, but homeowners are losing wealth because of the pressures applied by interest rates. Somebody correct me. I know somebody paid attention to the first segment. But my point in all that is the article went on to say that home appreciation year over year is still 14%. And I know a lot of areas locally where it's well over 14%. The most recent data that I read, and I'm not going to contradict her data sets because I don't know where it came from, but the Case-Shiller report showed, 15 and change, and the one prior to that was 18.1% year over year appreciation. So where I'm going with this is, I don't know how long you've owned your home, but if it was your primary residence in the state of Florida and you've made it your primary residence for 2 of the last 5 years, then you can take up to $250,000 as an individual, $500,000 as a married couple, capital gains tax free in profit and gains from the sale of that property. So with values up year over year, still double digits, and all of the uncertainty around the future, I don't know that it makes a ton of sense, because if interest rates keep marching up, it's going to be, a smaller and smaller buyer pool moving forward. And that's where my mind is around all this is, if now makes sense, then do whatever you're going to do now, because the future is unknown. And if rates go from, listen, we talked about it last week. We talked about it on the air. There was an article from the Fannie Mae economist, and I pulled the data from December of 2021, where they said in 2022, interest rates might touch 3.3%, and we all know where they are now. Pull up any news article around interest rates today, and you're looking at, high 5s to mid 6s. So yeah, it touched it, and it ran right over it like the Roadrunner cartoon. But that very same economist is telling us rates are going to tumble back to the mid 4s by the end of next year. I just don't know how much faith I put in all of these people anymore after the track record that they've demonstrated in the last 18 months trying to predict all this. So my point in this very long answer is that if there's profit in the house now, there's still a ton of demand around the real estate market right now. And while interest rates are in the 5s and 6s, there's a bigger buyer pool than if they're in the 7s or 8s. So I welcome a conversation in detail around this. Should you want to have one, just give me a call, 855-462-7292. That's the Anytime hotline. And I'd be happy to discuss this with you, because I would love to know a little bit more. How long have you lived there? How much equity do you have? Was it your primary? Do you have the opportunity to pull that money out gains free because of the it being your homestead for 2 of the last 5 years? all of those things need to play into the decision making around this. If your goal is just to hold on to it long term and have a rental property, guys, rents are not going down anytime soon. At least there's no indication of that. Rents are crazy right now. Maybe that is the right play. But if you're thinking that, you want not to have to manage that property all the way from Texas back here to Florida, it may make sense just to, cut and run and take the profit while you can. So anyway, I really, really appreciate that question. And I wish you all the best in Texas. And if you run into any of my exes in Texas, please tell them you do not know who I am and you don't know where to find me. But anyway, thanks for that, Alan. Hey, you hear that? That's my cue. We'll be back in two very short minutes, and we will continue on with the Mr. Mortgage Show. Sit tight, and we'll be right back with you.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And if you have questions, you heard the man, you can call or text 855-462-7292. That is the Anytime hotline, 855-462-7292. Jennifer is patiently pacing up and down and back and forth and womanning the Anytime hotline. She'll get your questions on the air. And whoa, she just threw something at me. Anyway, we're having a little fun in the studio today, but I will continue your questions. I know we've got some stacked up over there because I went long-winded on that last one. So let me throw it over and see what we have teed up. Hey, Jen, what do we have question-wise?
Kevin is asking, we just started looking at houses. We're seeing some that we like. I know we're going to need a loan approval to make an offer. How long does the approval take? Will it hurt my credit score?
Hey, that's a great question. So the approval process does not take that long. Really, it's as quickly as you can provide your documents. And I know that sounds a little bit, flippant, if you will. But, here's a summation. A pre-qualification doesn't require any verification. A pre-qualification basically is, my credit score is 700, my income is 65,000, and I have no debt. What do I qualify for? And we say, well, based on this information, you're pre-qualified for up to X amount. A pre-approval, on the other hand, requires all of that information to be verified. We actually review your credit report. We go through it with you, make sure everything's accurate. We have a real hard credit score. We look at your income. We look at your W-2s, your pay stubs. We verify the information. We need, to look at the bank statements to make sure the assets are there. With that information, you have a bona fide approval. One step further than that is we take that information and run you through underwriting. So you've been underwritten and you have what's called an AUS approval. Some people call it a DU or an LP approval, and I'm not going to sidetrack the conversation with all of that, but AUS stands for Automated Underwriting System. And we've taken your information, we've reviewed it, we've verified it, and we've run you through the underwriting engines, which basically mean assuming that the house meets the appraised value and all of your requirements, boom, you're done. You're ready to rock and roll. So that process can take, 1 or 2 days if you've got everything together. If you just need a pre-qualification, that's a piece of cake. You can do that in a relatively short period of time. But in this market, most people are still asking for bona fide approvals, and you need to take that extra step to provide all your documentation. Now, back to your other question, does it hurt your credit score? Every inquiry is going to move your score down a little bit. Now, a mortgage inquiry typically moves your credit score down. Now, don't hold me to this because I've seen it behave differently, but the rule of thumb is somewhere, give or take, around 5 points. Could be 3, could be 6, but around 5 points. So if you're a 681, you might move yourself down if you were pulled a second time to a, 681? So that's 676. But also, too, the credit reporting agencies are supposed to allow you to shop for a mortgage. So multiple mortgage pulls within a certain window are not supposed to move your score down more than one inquiry. Now, here's the thing. A mortgage inquiry is usually a replacement of debt. And what do I mean by that? If you're getting a mortgage, you're most likely renting now, or you have a mortgage now, you're selling and you're buying a new property. So you're replacing debt on your credit report. You're replacing one mortgage for another, or you're no longer renting and you're now making a monthly mortgage payment. So because of that, because the perception by the scoring agencies is that you're replacing debt, it has a tendency not to move your score as much as, say, a credit card application or a car loan application, because that's often new debt. You go to especially if you go car shopping and let them pull your credit at each individual dealership so they can quote unquote offer you the best deal. Suddenly, after the weekend of dragging the kids up and down the street, stopping at all the dealers, you have 5 or 6 inquiries on your credit. That dramatically reduces your credit score in the short term. And then over time, if the reporting agencies see that no new credit has been added to your report, it'll come back to where it was eventually. Same thing with credit cards. Here's another big one that moves credit score a lot is, a Home Depot card or a Rooms to Go card or a consumer credit card, I guess is where I'm going with this. And you're going to buy a new, kitchen appliance package at one of the big box stores. And it's $4,000. And they offer you a credit line for $4,000. Well, on your credit report, suddenly there's a $4,000 credit line with a $4,000 balance. So it looks like you took a new card and maxed it out immediately. And because of that, it typically impacts your score more. So long answer to your question, but it should not move your score significantly. And then the approval process itself can happen as fast as you can get the documents in, but plan on, 24, 48 hours to give the team opportunity to properly review all the docs and make sure you're placed in the best loan program for you. And then another question often around this topic is, how long is the approval good for? The approval's good indefinitely, assuming that your credit profile doesn't change. So every pay period, you should provide your lender with, the most recent pay stubs. Every bank period or bank statement cycle, provide them the most recent bank statement, because you want them to have the most recent information to assure that your credit profile hasn't changed. And then the credit report itself is valid for 90 days. After 90 days, it needs to be updated But again, it's not a big impact on your credit score to update it. It's just keeping the file fresh and mortgage ready. So hopefully you found that interesting. If you need more information, give us a shout, 855-462-7292. Hey, Jen, what else do we have?
Amy is asking, I relocated to Florida in February. I have a great job and want to buy a place. I met an agent at an open house last weekend. She told me I need 2 years work history here in Florida before I can buy. I'd rather not wait another 18 months. Are there other options?
Hey, there are a lot of options. So firstly, let me say this. There's a very good chance that you don't have to wait. Assuming that you stayed in a similar career when you relocated. So, I mean, if you stayed with the same company, then that's amazing. But we'll often do relocation mortgages for people, and they're staying with the same company or they're staying in the same field, and they can move and close on their property and start their new job in the same week. So you don't have to wait 24 months here in Florida unless there is a significant difference in your employment, a wildly different career, or you went from salary to commission only. And, you were running, you were running a healthcare facility and now you're selling cars. Those are two, wildly different professions, and you haven't established yourself in, the world of car sales and commissioned earnings, then yes, you're going to want to wait until you've established a 2-year work history. But if you transferred with the same company or you transferred and stayed in the same profession, then you don't have to wait. So hopefully that's helpful. But there's a common misconception around that because you hear everybody default to a 2-year work history. And I get it. It makes sense, especially considering you've relocated from another state. But again, I mention all of that only to say that during the pandemic, we had a lot of people who relocated and never set foot in the state until the day they pop down to close on the house and start their new job. So hopefully you found that helpful. I'm happy to walk you through it if you need more info around it. Just give us a shout, 855-462-7292. I appreciate that question because that's another one that has a lot of confusion around it. Sometimes people will change jobs. I had a gentleman who was a construction superintendent with one company for 19 years. And, he was super grounded and rooted in his profession, but another company, a competitor, wooed him away with a better salary package, and he didn't think he was going to be able to get a loan for 2 years also. And, he was able to get a loan right away, especially because he stayed in the same field, in the same area, and he just went to work for a competitor at a higher salary. So that one was super easy to verify. But I'd love to talk to you more about that. Just give us a shout, 855-462-7292. But I want to say thanks for that question because we get that one a lot. So I appreciate that. Hey, Jen, do we have... nope. I hear the music. That's my cue. We'll be back in 2. Sit tight for 2 very short minutes. We're going to get some commercials out of the way, and we'll jump back into your questions. Sit tight.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And it's always our goal to give you the information and the data that you need to make better real estate and mortgage decisions for you and your family. So we certainly appreciate you spending some of your Thursday with us. So thank you for that. And my favorite part of the show is always your questions. And I know, let me see. Hey, Jen, do we have any more questions teed up over there on the hotline?
The Anytime hotline is fired up.
Uh-oh. Looks like we have a few more. Let me try to get through a couple more real quick here. Hey, throw it at us, Jen. What do we have?
Gerald's question is, we've been considering a reverse mortgage. Can we pay off some debt with a reverse mortgage? We have one car loan and a Rooms to Go card.
That is a great question. And yes, Gerald, you can pay that debt off at closing, assuming that there's enough equity in the property to do so. And as you've heard me talk about it many, many times before, the reverse mortgage is an amazing opportunity. It's not right for everybody, but the person that it's right for, it's life-changing. So you can get rid of that car payment and get rid of that Rooms to Go card and never make another monthly mortgage payment. And you can even set it up so you receive monthly payments from the reverse mortgage. It's a pretty amazing tool, but I appreciate that question. And you know that I always say the reverse mortgage requires a lot of Q&A. So let's talk offline about that. I encourage you to give me a shout, 855-462-7292. Hey, Jen, was that an email or a... Yeah. Okay, I'm going to shoot him back an email. Gerald, I'm going to shoot you an email and see if we can't connect offline. But appreciate that question. That was a good one. Hey, Jen, what else do we have?
Crystal sent this text. If we pay cash for a house, how long do we have to wait before we can pull some cash out with a mortgage?
Hey, that's a great question. A lot of people paid cash during the pandemic because they were, trying to elbow all the other offers out of the way. And there was a program created called delayed financing that allowed you to immediately refinance, even though there wasn't a loan on it. It's technically a refinance, and pull that cash out without having to pay the slightly higher interest rate associated with a refinance. So I don't know how long it's been for you, but you can jump in right away and use a delayed financing strategy and put a mortgage on the property to pull that cash back out. And, with where rates are now and where other investment vehicles may be performing better than 5 or 6%, it may make sense to do it. And I know a lot of people who just want cash in the bank because of the uncertainty going ahead economically. Equity lines, cash out refis, they're just trying to, pocket wood for the fire for later because they're super concerned about where we're heading economically. And, we might have to do a part 2 to the show because I've got some strong views on that, and having cash is never a bad idea, but appreciate that. Hopefully that helps. Hey, we're at the point in the show where I'm going to ask you a favor. And I'm hoping I can count on you to share the show if any of this resonated with you. If you know someone who has real estate or mortgage questions, they're thinking of buying or selling or refinancing, please introduce them to the show. I'd love to answer their questions. They can visit Mr. Mortgage Radio to catch all the back episodes. That's Mr. Mortgage Radio. They can give us a shout on the Anytime hotline. They can visit the website, www.mrmortgage, but I'm hoping that I can count on you to help us spread the word. But hey, I'm going to let Jen throw out the Anytime hotline because I love her delivery. Jen, how do people reach us when we're not on the air?
Do you have questions regarding mortgage or real estate for Mark? Call the Anytime hotline, 855-462-7292. Call or text anytime.
Well done. That was a super professional delivery. Thank you for that. So, hey guys, you hear that? You know what that means? We have wrapped up another week. Man, that went fast. I really enjoy spending time with you guys here on WPSL. You never disappoint. Thank you for bringing your questions. and your comments. We certainly appreciate you. Hey, next up is Clay and Buck. Sit tight. I'm sure those guys have a great show teed up for you today. But we will be back next week right here, same time, same station. Hey, have a great week. Say bye, Jen.
Goodbye, Jen. See you next week.
All right. That was Jen saying goodbye, signing off for us here on the Mr. Mortgage Show. We will catch you next week right here, same time, same station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on the Mr. Mortgage Show.